Now I will discuss. Mr. A is a proprietor of Akash Enterprises having 2 units. He transferred on 1st April 2025 his unit 1 by way of slump sale. So this is the date of transfer. So tell me, in which year the transfer is taking place? Year. So in this year, the slump sale is taking place. So in this year, the capital gain on slump sale will be taxable. Yes or no? Which unit is transferred? Tell me. Unit 1 by way of slump sale. Okay, no? For a total consideration of, so this is nothing but the fair market value of lump sum consideration. Okay, no? And if they are not telling you the fair market value of assets transferred in slump sale, FMV1 is not given, then FMV2 is taken as full value of consideration. Yes or no? If that FMV1 would have been given, what we would have done? FMV1 and fair market value of the consideration, whichever is higher, we would have taken that as full value of consideration. So right now, what is the full value of consideration? Tell me. 25 lakhs, no? So this 25 lakh is the full value of consideration for transferring your unit 1. Okay. Now, fair market value is also given, sir. The fair market value of the capital assets of unit 1. Fair market value of capital asset of unit 1 is 30 lakhs. So 25 lakhs or 30 lakhs. Whichever is, so higher is 30 lakhs. So this will be your full value of consideration. That 30 lakh was not given, then we would have taken 25 lakhs only. Okay, no? Unit 1 started in the year 2005-06. So it was started in the year 2000 and slump sale is taking place on. So can I say you have a period of holding now? So 452 31st March 2025. Can I say this period of holding is more than 36 months? Therefore, unit 1 is equal to long-term capital asset. Unit 1, which is your capital asset, is a long-term capital asset. Whatever gain will arise will be long-term gain. To calculate that, this is your full value of consideration. Expenses incurred. Expenses incurred for this transfer, how much? 28,000. So can I say this is your transfer expense? 28,000. So you will get net consideration 29 lakh 72,000. Now out of this you are going to reduce cost of acquisition, which is nothing but to calculate this net worth we need assets of unit 1 minus liabilities of unit 1. Can you see liability side? Can you see bank loan? This is outsider's liability, and trade creditors, this is outsider's liability. Only these 2 items we are supposed to reduce. Yes or no? But for unit 1, 70% is bank loan. Entire bank loan we are not supposed to reduce. We are supposed to reduce the liability of unit 1 only. So how much bank loan relates to unit 1? 70%. That is 1,40,000. How much trade creditors? 25% of 1,50,000 will be. So what is the book value of all the assets? 177,500. Now we are supposed to take the value of assets, total assets. Yes or no? Can you see land 12 lakh rupees? Revaluation reserve is created by revising upward the value of land of unit 1. Can you see 3 lakh rupees revaluation is there? So your land should be actually 9 lakhs. So 9 lakh value of the land we are going to take. Okay, no? Machinery 3 lakh rupees. So machinery is a depreciable asset. And for depreciable asset we don't take book value. We take WDV for income tax purpose. But WDV for income tax purpose is not separately given. If you give, we will take WDV for income tax purpose. Or give us the details of this machinery. We will calculate the WDV for income tax purpose. Give us the actual cost of the machinery. When the machinery was purchased for the purpose of business. We will take the depreciation and all. We will calculate what? The WDV for income tax purpose. But if you are not giving those details also, you are not telling us what is the WDV for income tax purpose, then we'll have no other option but to assume that whatever balance sheet value of the machinery is given, that only is the WDV for income tax purpose also. If that would have been different, you would have given the different amount, we would have taken that amount, or you would have given us the details, we would have considered those details and we would have calculated the WDV. If you are not doing that, then we have to assume that this is only the WDV for income tax purpose also. Understanding? Then debtors, can you say debtors? Debtors. We'll take the full value of debtors, book value only. Now can you see other assets? Other assets how much? Now information number 3. Okay. Now see information number 4 also. The value of the machinery represents the WDV as per Income Tax Act. Thank God. So income tax also has 3 lakh rupees. If this information was not given, if this information was, we would have definitely taken 3 lakh only. But this information, they are saying that whatever is the book value, equal to that only the WDV is also there. Hence we are taking 3 lakhs for machinery. Okay, now read information number 3. Other assets of unit 1 include patents acquired on 1st July 23 for rupees on which no depreciation has been charged here. Meaning that out of this 1,50,000 now, 50,000 is patents and 1 lakh rupees is other assets. So this entire 1 lakh you can take, but that 50,000 you cannot take fully, because that 50,000 is the patents. Patents is a depreciable asset under PGBP. Do you remember? No? Intangible asset. On that you would have definitely claimed depreciation at the rate of 25% under PGBP head. For 23-24 also and 24-25 also. For 2 years you would have taken the depreciation. After claiming that depreciation, whatever value remains, that is the WDV for income tax purpose. For patents, we are supposed to take that value and not 1,50,000. Getting my point? So, what will be the depreciation for first year? 50,000 into 25%. And see, when the patents were acquired, 1st July 2023 to 31st March 2024, 180 days or more. Hence, for the first year, the depreciation was full. 25%. If I would have been your examiner, what I would have done, instead of 1st July 2023, I would have written 1st November 23. So patents are acquired in 23-24, but in that year they were put to use for less than 180 days. So first year depreciation would not be 25%, it would be only 12.5%. Yes or no? But you are very lucky that examiner is not one sir. Examiner is a good person. He is saying that for the first year also, full depreciation, because it was put to use for 180 days or more. And for the second year, 24-25, full 25% depreciation. Yes or no? So what was the depreciation for the second year? First year, 12,500. Second year, 9,000. So your WDV will be this minus 12,500 minus 9,375. So this will be 28,125. This value is what? WDV for income tax purpose. So for patent we can take this value. We cannot take 50,000. Yes or no? And for other assets we will take how much? Full 1 lakh. Yes or no? So now on your calculator, we are supposed to take the value of all the assets. Okay, no? For land how much you will take? For machinery? For debtors? For other assets, this 1 lakh, yes or no? And 28,125 for patents. Total is how much? 28. This is the total assets minus total liabilities. $12 lakh, 56,000, 15,000, 50,000. 6. This is the net worth. This is the cost. Reduce that out of net consideration. 370. This is your capital gains. Short term or long term? Why? Because unit 1 is a long term capital asset. Period of holding was more than. Final answer, sir. Final answer. 17, 21, 375, sir. 1, 2, 3, 4 and 5 lines. You are getting your final answer, sir. 10 marks in the exam. 10 marks for this type of question. Just imagine. Very difficult question, sir. Very difficult, no? Okay, let's come to the next part now. Now come to your test your knowledge section. Test your knowledge section. Okay, sir. Test your knowledge section, sir. So, question number 4. And this question is on 45 1A. Whatever discussion I have done in 45 1A, if you remember, you will be able to solve this question. And if you don't remember, then God will save you. Start fast. If you remember something like this, you remember this discussion I have done 5 lakh years ago. Yes, we all were sitting with the dinosaur. That time this discussion was done. Yes or no? This discussion you remember and now solve the question. Fast. What the answer? Very difficult, no? Ah, difficult. Difficult answer. See, what the question is telling you. Mr. A is an individual carrying on business. So in his business, there was stock, there was machinery, which were damaged and destroyed in a fire accident, which occurred in December. So damage or destruction is taking place in this year, December 25. The value of the stock lost, total damage was 6,50,000. So the stock which is damaged or destroyed, what is the value of that stock? 6,50,000. Certain portion of the machinery could be salvaged. The opening balance of the block as on 1st April 25, that is WDV, 31st March 25, after providing depreciation for previous year 24-25 was 10,80,000. So the machinery which got damaged or destroyed, what was the opening WDV of that machinery, block of machinery? 10,80,000. Okay. During the process of safeguarding the machinery and in the firefighting operations, Mr. A lost his gold chain and diamond ring. So this question tells you about 3 assets. 1, stock. 2, machinery. And 3, gold chain and diamond ring. Okay. Now this and this damaged or destroyed. Yes or no? So also your gold chain and diamond ring were lost in the firefighting operations. So the gold chain and diamond ring is also damaged or destroyed. So 3 assets are getting damaged or destroyed. Stock, machinery and gold chain, meaning your jewelry. Out of 3 assets, only 1 asset is your capital asset. Which one? 2 assets are your capital asset. Gold chain and machinery. But for machinery, if you will receive insurance claim, how much? 6 lakh. This will be adjusted in the value of the block. For gold chain, if you are receiving what? Insurance claim, that will go to section 45 1A. Capital gain will be calculated. And for the stock insurance claim is received, this insurance claim will be treated as your deemed PGBP income. Yes or no? So you are just supposed to, you are requested. See, they are requesting you. How good your examiner is. Requesting you. That we request you to comment. Sir, please comment on the tax treatment of the above 3 items. Ayyo, what comment you are going to give? Come on, tell me. First item, sir. Stock in trade of business. Yes or no? Is it damaged or destroyed? Damaged or destroyed. How much is the cost of that stock? 6 lakh. Don't you think this 6,50,000 is your loss incurred in the course of business or profession? So this is loss in the course of what? Business or profession, and this loss will be allowed as deduction under the head capital gains, no? PGBP. Yes or no? Now against the stock which was damaged or destroyed. Yes or no? Now insurance claim is also received. How much insurance claim received, sir? 4,80,000. So this insurance claim received will be your deemed PGBP income under section 41(1). 41(1) under the head PGBP. First item done, sir. What was the first item? Stock in trade of business, which is not your capital asset. Okay. Next one. Next item. Color, blue color. Which item? Machinery. Machinery used in what? Business. Is it a capital asset? Is it a capital asset? Sure. But this is a capital asset which is forming part of block. Do you remember? A capital asset which is forming part of block. In that case, the capital gain is calculated. As per which section? 50. Any gain or loss arising will be short term as per section 50. But if the assets remain, value also remain, there will be no short term gain, no short term loss. Depreciation will be calculated. You remember, no? So, machinery which was used in the business, okay, no? Even this was damaged or destroyed. Now, this damage or destruction is what? Deletion. Deletion from damaged or destroyed. And against that you are going to get what? Against that you are going to get insurance claim. Yes or no? That insurance claim received will be treated as what? Will be treated as deletion. Deletion from value of block. Yes or no? So how it will be treated? We'll take opening WDV of the block, which was 10,80,000. Opening WDV as on 1st April 2025. Add what? Additions during previous year 25-26. Did you read the entire question properly? Tell me, where in the question they are telling that in this block of machinery, new machinery is acquired? Are they telling you? That means additions greater than equal to 180 days. How much? Nil. Less than 180 days. Less than 180 days. Nil. And not put to use. Not put to use. Nil. Nil plus nil plus nil will be nil. Nil plus 10,80,000. Sure. Same amount you are getting on your calculator also, no? 10,80,000. Less. Less what? Deletions. Now in this deletions, no? What are you going to write? Insurance claim, which is received on damage or destruction. So, how much insurance claim you are receiving? 6 lakh. Reduce that. And after reducing, what is the value remaining in the block? Now, two things are possible. After this deletion, no machinery remaining in the block. All the machinery lost by fire. Yes or no? No machinery remaining in the block. Then this remaining WDV, remaining value will be treated as your short-term capital loss. Yes or no? But after deletions, after damage or destruction, if there are still some machinery in the block, then, and that is also used in your business, then assets are there, value is there. On this value you will calculate depreciation. Understanding? So tell me, is there machinery still remaining in the block? How can you say? Certain machinery could be, but they are not saying that the salvage machinery is still usable and you are using in the business. Are they saying? So even if the salvage machinery is saved, but it is in usable condition, it is still used in the business, it is still in the block as at the end of the day. Are they telling you? No. So we will assume that even if some machine could be salvaged, that was not in a usable condition. So insurance company took it away and gave me a insurance claim of rupees 6 lakhs. Understanding? Some part of the machine could be salvaged. See? Some machines could be salvaged or some part of the machines could be salvaged. Question is saying that certain portion, yes or no? So certain portion means assuming that only one machine was there in the block and that caught fire. But the entire portion of the machine could not be salvaged. Certain portion of the machine could be salvaged. Meaning that machine is not in a usable condition. The insurance company would have taken away. And now there is no machine remaining in the block. So that 4,80,000 is what? Value of the block. But against that there is no asset. So this will be short-term capital gain, no? Gain, no? You are receiving more amount as compared to the cost, no? Or you are receiving less. So whatever cost which remains will be your loss, no? Whatever value will remain will be your loss, no? Under section 5050. And it is assumed that portion of salvaged machinery is not in the block as on 31st March 2026, yes or no? And taken away by the insurance company, hence block ceases to exist. Therefore, no assets in the block and remaining WDV, remaining value in the block is hence treated as what? Treated as short-term capital loss. Done, sir? Understood what happened? Now, any other asset is there? Which asset? Jewelry, can I write? Jewelry is a capital asset, not a capital asset. Jewelry also damaged or destroyed. Okay. And against that, insurance claim is received. So this insurance claim received will be full value of consideration under section 45(1)(a). And this damage destruction is what? Is equal to transfer under section 2 subsection 47. Why transfer? Since extinguishment of right is taking place. Right in capital asset. Capital asset does not remain, so right in the capital asset also does not remain. If the right does not remain, meaning the capital asset is transferred. Now, see, on the damage or destruction of a capital asset, if any insurance claim is received, capital gain is calculated under section 45(1)(a), if you remember that. Hello? And to calculate that capital gain, amount of insurance claim will be taken as full value of consideration. So computation of what? Capital gains will happen here. Done, sir? How to compute that capital gain? Full value of consideration, amount of insurance claim, amount of insurance claim. How much is the amount of insurance claim? 1,80,000 minus transfer expense. How much was the transfer expense? Nil. So what is the net consideration? 1,80,000 minus cost of acquisition of the jewelry. Yes or no? When did you acquire the jewelry? 2005. And what was cost? 1 lakh. And that will be reduced without any indexation. Why? It was lost in the firefighting operations, meaning damaged or destroyed in December 25. Meaning on or after 23rd July 2000. Hello. Understanding? So tell me, how much will be the gain? 60,000. And that gain will be long-term capital gain. Okay. Why long-term capital gain? Because the period of holding of jewelry starts from date of acquisition, April 2005 to December 2005, which is more than how many months? 24 months. Therefore, the asset is a long-term asset and the resulting gain will be long-term gain. If this type of question comes in the exam, trust me, this will be for minimum 6 marks. Minimum 6 marks. And just see what is there in this question. Nothing. Will you be able to present like this? Now today at home you will see the answer which is given there. You will get the same thing, but in the paragraph form. Our presentation is a little bit understandable. Okay. Should I move to the next question? Okay. Now see, before moving to the next section, we would first do some concepts now. Okay. Now first concept, 50C. Very important section. This is also very important section. 50B is also important, 50C is also important. Yes or no? Now 50C talks about immobile property. 50C talks about, so whenever you will calculate your capital gain of any immobile property, if you are showing a sale consideration which is less than the stamp duty value of that property. Do you know what is stamp duty value? What is the stamp duty value? Huh? See, usually what happens now? There are two parties whenever a immobile property is bought and sold. Two parties are, this is a seller selling the property, this is the buyer buying the property. Between them a contract, an agreement is made. And what is the name of that agreement? Sale agreement. Yes or no? Between them there is a sale agreement made. So whenever they will decide to buy and sell a property, seller and buyer of immovable property, okay, no? They will always make a sale agreement. So in this sale agreement, the terms and conditions of sale of that immobile property is given. Yes or no? So it will be written that he is a seller, he is a buyer, his details, buyer's details will be given, the details of the immobile property which is bought and sold. So address of the property, location of the property, what is the area of the property, all those things will be given. Yes or no? Along with that, it will be given that this immobile property he is ready to sell for a consideration and he is ready to buy for that consideration. So that consideration at which the property is bought and sold is given in that sale agreement. So sale agreement will contain what? Sale consideration. What? So in this sale agreement, the sale consideration is given. Yes or no? At what price the seller is selling, at what price the buyer is buying. That sale consideration is given in the sale agreement. Now what happens now? The seller, who is the legal owner of this property, who is selling this property to the buyer for this much consideration, now this legal ownership also he will have to transfer to the buyer. And for that, they both will go to registrar to get the sale agreement registered. And the moment this sale agreement will be registered on the name of buyer, yes or no? Now buyer will become the legal owner. That time the legal ownership will be transferred. Understanding? So first the registration will happen or the sale agreement will be made. What will you do first? Registration or sale agreement? So sale agreement date will be coming first. Okay, no? So for example, the sale agreement was made on 9th of July 2025. On this the sale agreement was made. Now this sale agreement will be registered, yes or no? After the sale agreement, there is a registration of the property which will take place. Now when the registration will happen? Before sale agreement or after sale agreement? After sale agreement, it can be any date. Yes or no? So usually it happens within 2-3 days, but in some cases there can be a delay also. So both the buyer and seller will go to the registrar office, property registrar office, and they'll get the property registered. So registration takes place, for example, it takes place on 12th of January 2026. So on this date the registration will happen. Now see, whenever the buyer and seller will go for the registration, what they are getting registered? Sale agreement will be registered, no? So both will go to the registrar and tell the registrar that registrar, see, I am a seller, he is a buyer, and this is the sale agreement. Based on these terms and conditions, the sale is made. Okay, kindly register this document and remove my name as a legal owner and consider the buyer only as a legal owner of the property from now onwards. Registrar will say, okay, no problem. So we will do the registration on the name of buyer. We'll make the buyer as a legal owner, provided you pay some registration charges, some stamp duty, which will be applicable for registering this sale agreement with us. So if you want to register, who is saying this? Registrar is saying that if you want us to register this sale agreement, you both will have to pay what? Stamp duty charges, registration charges, yes or no? And that we will apply on the sale value. That we will apply on the, and where is the sale value recorded? In your sale agreement. So whatever is your sale value in the sale agreement, on that value we are going to apply what? Stamp duty charges, registration charges. So usually those charges are 5 to 7% in different states. So in some state it is 5%, some states you will go, it will be 7%, yes or no? It varies. And the range is 5 to 7% maximum. Okay. Now just imagine, if the sale value in the sale agreement, sale value is 100 crores. How much? So on that 100 crore, first we will have to give stamp duty registration charges at the rate of 5%. And that is 5 crore rupees. How much? Small amount or a big amount? In terms of 100 crores, it is a small amount, but still it is a huge amount. And that too also for what reason? That too also for registering the property from my name to the name of the buyer. That's it. What they will do? What that registrar will do? They will just remove my name from the register as a legal owner and record the name of the buyer. That's it. And for that they are going to charge 5 crore rupees. Buyer, would you like to pay this much amount? Because this entire 5 crores we both have to bear. Understanding? And since we know that this registration charges are just to register the property, legal ownership in the name of government records, why to pay so much amount to the government? Let's save some amount, no? How do we save that amount? At what price the property is sold? 100 crores? Yes or no? Will not record 100 crores. In the sale agreement we will show only 60 crores. How much? Who comes to see that at what price I am selling, at what price you are buying? We both are actually buying and selling for 100. Yes or no? But since we have to save the stamp duty, registration charges, we will definitely not show full 100 crores in the sale agreement. Because if we will show full 100 crores in the sale agreement, what will happen? We will have to pay tax. We will have to pay stamp duty on the entire 100 crores. Let's save that stamp duty, no. There is no requirement to give so much amount to registrar. So buyer, do one thing. At what price you are buying the property? 100 crores. At what price I am selling? 100 crores. Give me 40 crores in cash. 60 crores in check. And the sale agreement we will make for only 60 crores. And this sale agreement we will take to the registrar. Now registrar will apply the stamp duty on the sale value which is recorded in the sale agreement. How much is that? 60 crores. 5% of that. We save bloody 2 crores rupees. And also the seller will save income tax. How come? If the income tax officer will ask me that, sir, you have sold your property, I will say, yes, I have sold my property. How much? Will I say 100 crores? I will see the sale agreement. Sale agreement, how much is the value? I have sold for 60 crores. So will I pay income tax on 100 crores or 60 only? So that will save my income tax also. And that will save our stamp duty registration charges also. And see, the 40 crores cash which you will give, no, will be your black money. Will be converted into white. Because now that is invested in the property. Whenever you will sell your property, a higher amount will come. And that higher amount you will receive in cash. No, you will receive in bank. So automatically your black will be converted into white. So buyer, your black will be converted into white. 40 crore black money you are having. That black money you give me as a consideration. I am ready to take that. Because I don't want to pay tax on that 40 crores. Understanding? So that way 40 crores you can easily buy your property from me. And that property will be registered on your name. Whenever you will sell that property, definitely that 40 crore you will receive in bank. Now that will be converted into your white money. Understanding or not? And for me, it will be a benefit that I am going to save income tax on that 40 crores because that 40 crores I am taking in cash. You are not going to tell anyone, and I am also not going to tell anyone that I have received that 40 crores. So this way what happens? That stamp duty value is also paid less. Income tax is also paid less. Yes or no? So to check all these practices, registrar, what he will do? Registrar will call you. Buyer, seller, please come here. Have you come for registering your sale agreement? Okay. Tell me, what is the sale value written in the agreement? Oh, 60 crores. What do you think? We'll register your sale at 60 crore value. We will also determine the value of your property. That if your property can be bought or sold, it can be bought or sold for a minimum how much value? Because bloody in the agreement you can say you have bought or sold for 5 rupees. So do we charge stamp duty on only 5 rupees? So we will also determine. So the registrar on a periodic basis, they also determine a benchmark value, reference value, benchmark value, also known as stamp duty value, also known as, that is the minimum value at which your property can be bought and sold as per the registrar. And registrar will determine that value as per the stamp duty rules applicable in the state. So stamp duty law, stamp duty rules applicable in that state, as per that stamp duty law and stamp duty rules, they will also determine one value. Why they are determining a value? That if someone comes to register their property with us, and in the sale agreement, if they are showing a value which is higher than or equal to this value, then the transaction is okay. We are ready to take stamp duty value on that value which is recorded in the sale agreement. But that sale agreement value can be manipulated by the buyer and seller, no? So what if they manipulate and they show unnecessarily lower value? That will impact the stamp duty collection of the state. So that should not happen. That is the reason why a minimum value, a reference value, a benchmark value is calculated by them. And that value is known as stamp duty value. This is the minimum amount which the registrar thinks that your property can be bought at this value, sold at this value. Minimum this much amount should be received by selling the property as a sale consideration. So if in your sale agreement you are showing how much? 60 crores. How much you are saying? 60 crores. Yes or no? So that 60 crores has to be compared with some value. If there is no benchmark value, no value to compare, then we will have to charge the stamp duty value on whatever amount which is given in the sale agreement. Yes or no? So what they are going to do? Registrar? By applying the stamp duty rules, stamp duty law of that state, they will determine a reference value. They will determine a benchmark value, also known as circle rate or stamp duty value. Understanding? Now the stamp duty value which they calculated now was 80 crores. Meaning, according to the registrar, if this type of property is bought or sold, it can be bought or sold for minimum 80 crores. Minimum. How much you are selling it for? You can sell for peanuts. But we will charge stamp duty at least on 80 crores. So tell us how much your sale agreement says. Your 60 will be ignored and we will charge the stamp duty on 80 crores, which is stamp duty value. Because we cannot accept that you are going to sell your property below this 80 crores. You would have definitely sold your property for 80 crores or more. So we want our stamp duty on 80 crores, minimum 80 crores. Okay. So in your sale agreement, are you showing less than 80 crores? So they will charge stamp duty on 80 crores. But what if you are showing 75 crores? Then also they will charge stamp duty on 80 crores. So any value as a sale value you are showing in your sale agreement, that value is less than stamp duty value. Less than stamp duty value, then the stamp duty will be charged on the stamp duty value. Understanding? What if in the sale agreement we are showing 82 crores? Then very good. You are selling it for a higher value. On that value we will charge stamp duty. Understanding? What if you are selling for 90 crores? So they will charge the stamp duty on 90 crores. Your sale value is right, good, because it is more than our expectation only, no? Understanding? Just imagine if the registrar does not accept your value, sale value, for charging stamp duty, will the income tax officer believe you? Even he will compare your sale value with your stamp duty value. That let us check how much sale value the assessee is saying. Seller, at what price you have sold your immovable property? Seller, at what price you have sold? 60. Very good. 60. Very good, very good. Wait, 2 minutes. Register. Income tax officer asking, register. How much value you charge stamp duty? 80 crores. Oh, according to you, the property can be sold for at least 80 crores. Sure, na? Thank you. Now he will come to you. How much you are selling for? But the property registrar says that it can be sold for at least. Then you are trying to hide something from income tax department. 50C will apply. Which section will apply? If your the sale value, sale consideration is lower as compared to the stamp duty value, then we will apply 50C. No, directly we will not apply, don't worry. The difference should be more than 10%. Difference should be more than 10% of your sale consideration. So how much was your sale consideration? 60. How much was your sale consideration? 10% of that? 6 crores. So the difference between the sale consideration and the stamp duty value should be more than 6 crores. Tell me how much is the difference? 60 crores is the sale consideration and the stamp duty value is 80 crores. What is the difference? Is this 20 crores more than 10%? 6 crores? 50C will apply now. And the moment 50C is applied for the purpose of computing capital gains, for the purpose of computing under the Income Tax Act, your sale value will not be taken as your full value of consideration. The stamp duty value will be deemed to be your full value of consideration. 50C over. 50C over. Now 2-3 important things you are supposed to remember for 50C, but 50C tells you this. What section 50C tells you? Come on, tell me. That in the sale agreement, whatever value you have shown, okay, no, sale consideration, okay? If this sale consideration is lower than, lower than what? Stamp duty value of the property. So first of all, you will come to section 50C only if the sale consideration is lower. What if the stamp duty value is 80 crores and you are showing a sale consideration of 90 crores? Then don't come to 50C. Your sale consideration will be full value of consideration, yes or no? What if you are showing 95 crores? Don't come to section 50C. Your sale consideration will be full value of consideration. But if the sale consideration which you are showing for your immovable property is less than the stamp duty value of that property, yes or no? Then you will have to check the difference. You will have to check the difference between your stamp duty value and the sale consideration. What is the difference? If that difference is more than what? 10% of your sale consideration. 10% of stamp duty value? No. 10% of sale consideration. So whatever is your sale consideration, 10% of that. If the difference is more than that 10%, then here, which section will apply? 50C will apply. And once 50C is applied, the full value of consideration, what were you showing? The sale consideration which you were taking as your full value of consideration will be ignored and the stamp duty value will be deemed to be your full value of consideration. Take the stamp duty value and based on this you calculate your capital gain. Lower sale consideration will not be considered to calculate your capital gain. You calculate your capital gain based on this stamp duty value. Understanding or not understanding? Sure? Now, one question. I will put you a little bit in trouble. Huh? Sale agreement is made on? Immediately same day you registered, or registration will take some time. Maybe see, usually what happens, no, in these kind of transactions, usually sale agreement is made and within 2-3 days, 5 days, usually it gets registered. But that does not happen in all the transactions. In many of the transactions, this might also happen that first the sale agreement will be made and the registration will happen after some time. And the registration can take 2 months also, 3 months also after the sale agreement. Okay, no? It depends on the availability of buyer and seller, whether they are available to go to the registrar office or not. Because see, we both will have to personally go to the registrar office. For that your time is also to be managed, my time also to be managed. We both will together go to the registrar office. Physical presence is required over there. And not possible that immediately sale agreement is made and immediately we can go. Yes or no? And once that sale agreement we both are available also, then we both should have to pay that stamp duty, registration charges, legal charges, because some amount you are going to bear, some amount I am going to bear. Yes or no? Time is not there, money is not there, intention is not there right now. So it might take some time. So sale agreement was made in July and we both went to the registrar office to register the property on? Sure, no? Can I say date of sale agreement? I call it DOSA. Black color. This is the date on which the sale agreement is made, no? This is what? DOSA. Idli dosa. DOSA. Date of sale agreement. And this is the date on which the registration is done. This is DOR. So DOSA and DOR. Date of sale agreement and date of same or different. So it is bright chance that on this date the stamp duty value was different and on this date the stamp duty value was different. Why? Because see, when the property, the market value of the property will keep on changing in the market. Yes or no? So depending on the change in the market value of the property, the registrar will also update the stamp duty value. So not necessary that the date on which you entered into the sale agreement, on that day the stamp duty value, and the date on which you registered the agreement, on that day the stamp duty value, not necessary that both the stamp duty value will be same. It will be different. Earlier the stamp duty value was less. As on the date of sale agreement, the stamp duty value was less. And after 5, 6 months, 7 months, whenever you are going for registration, maybe by that time the market value of the property would have changed. And as a result of that, the registrar also updated the stamp duty value. Also, registrar also updated the stamp duty value to a higher amount. Yes or no? So earlier the stamp duty value was 79 crores. How much? And now on the date of registration, it became 85 crores. How much? So how many stamp duty values you have now? 2, no? One stamp duty value as on the date of registration, another stamp duty value as on the date of sale agreement. Now for the purpose of section 50C, how many stamp duty values you want? 1 or 2? Which you have to compare with the sale value. So with the sale consideration, you are supposed to compare the stamp duty value. Yes or no? Under section 50C, if you are comparing sale consideration with stamp duty value, one sale consideration will be compared with one stamp duty value, no? Now you have two stamp duty values. So my question is, which stamp duty value you will consider for this comparison? Did you get my question? The stamp duty value which you will compare with sale consideration should be as on the date of sale agreement or as on the date of registration? Always on the date of registration. Because registration is the time, at that time only the legal ownership is transferred. And On that day only, whatever the stamp duty value will be there, on that only the stamp duty will be charged. Understanding? And the property's period of holding is also usually taken till date of registration. So date when I acquired the property till the date of registration will be my period of holding. So usually, what did I say? Usually in all the cases, stamp duty value as on the date of registration. This stamp duty value we have to take. For 50C also we are going to take this stamp duty value. Understanding? But there is one exception. There is one. And in that exceptional case, stamp duty value as on the date of registration will be ignored, and for the purpose of section 50C to compare with sale consideration, stamp duty value as on the date of sale agreement will be taken for 50C. And what is that exceptional case? On or before the sale agreement, on or before the date of sale agreement, if the consideration or any part thereof is paid by the buyer to the seller. How much was the consideration, guys? 60 crores, no? How much I sold it for? 60. How much you bought it for? 60. So sale consideration is 60 only, no? 60 crores or any part thereof. What did I say? 60 crores or any part thereof was paid by the buyer to the seller on or before 9th of July. On or before. But how will we come to know? Till the time it is not paid by way of prescribed modes. If it is paid by way of prescribed modes, only then it can be said, no, that you have actually paid. You will say that I have paid by cash. How will we know? You will pay that I have paid by way of bearer check, cross check. How will we know? So have you actually paid or not? Buyer, have you actually paid the consideration or any part thereof on or before the date of sale agreement? Prove it. How will you prove it? Only if it is paid by prescribed modes. Which modes? So on or before date of sale agreement. What did I say? Any part of sale consideration or entire sale consideration is paid by way of prescribed modes. By way of, then the stamp duty value as on the date of sale agreement can be taken for section 50C. Then only the date of then only the stamp duty value as on the date of sale agreement can be taken for the purpose of section 50C. Understanding? So tell me. I am writing something in front of you. You are going to tell me. Your sale consideration. Your sale consideration for transfer of immobile property. If this amount is less than what? Stamp duty value. And then you have to check the difference. You have to check the difference between both of them. Difference between the stamp duty value and the sale consideration. That should be more than 10% of what? Sale consideration. If both these situations, if all these two conditions are satisfied, then section 50C will apply. And if 50C will apply, the full value of consideration which you were taking as your sale consideration, you were showing the sale consideration, you were showing that immobile property is transferred for this amount. So you were calculating your capital gain based on this amount. Yes or no? This amount will be ignored and the stamp duty value will be deemed to be your full value of. Understanding? No? But for this, first condition is satisfied, second condition is satisfied. And in the first condition you are taking what? Stamp duty value. Now this stamp duty value can be of two dates. Date of sale agreement and date of registration. Which stamp duty value you will always take? Date of registration. Date of But there is one exception. There is one. If the sale consideration or any part thereof, if the sale consideration or any part thereof is received by the seller, is received by way of prescribed modes on or before the date of sale agreement, then ignore this stamp duty value, and the stamp duty value as on the date of sale agreement can be taken. Understanding? And if this condition is not satisfied, then take the stamp duty value as on the date of registration. Understanding? Yes or no? So, tell me, your date of sale agreement I am writing, and I am writing date of registration. Okay. On this date, I am writing the stamp duty value. So what is the stamp duty value? First of all, I will write the date of sale agreement. What was the date of sale agreement? 9th of July 2025. And what was the date of registration? 12th of January 2026. Done, sir? Stamp duty value here was 50 lakhs and here it was 52 lakhs. Okay. Both the details are given. Done, sir? Tell me, both the dates are same or both the dates are different? Both the dates are different, not the same. So in this case, this stamp duty value, always ignore the stamp duty value as on the date of sale agreement. Usually we ignore. Yes or no? But. This stamp duty value can be taken only if this you take, first of all, wait. If this stamp duty value you take, you ignore this. Then no. But you ignore this and take this stamp duty value only in one case. Only if buyer or seller has what? Received sale consideration or any part thereof. Any part thereof by way of on or before DOSA, date of sale agreement. If this thing has happened, no, then ignore the stamp duty value as on the date of registration, take the stamp duty value as on date of sale agreement. Otherwise, in every other case, you are going to take the stamp duty value as on the date of registration. Now mind it, this discussion which I have done, no, will come in IFOS also at the time of gift. At the time of gift, the same discussion is going to come, and that time you are supposed to remember this. Will you? Let's see how much you will remember. Now tell me, few cases I am making in front of you, okay, no? Sale consideration, and this is the stamp duty value. Stamp duty value can be on the date of sale agreement, can be on the date of registration, as the case may be, okay, no? Sale consideration is 70 lakhs. How much? And stamp duty value was 60 lakhs. 50C will apply or will not apply, and what will be the FVC? Done, sir? Come on, tell me. 50C will apply, will not apply? Will not apply. Then what will be the full value of consideration? 70 lakhs. Very good, very good. This is 70. Stamp duty value is 72 lakhs. 50C will apply or will not apply? Will apply. Will not apply. Will apply. Will not apply. Because 50C will apply only if the difference is more than 10%. 10% of the sale consideration. Stamp duty value is higher. Sale consideration is lower. There is a difference of 2 lakhs. But that 2 lakh is not more than 7 lakhs. So 50C will not apply only. And 50C will not apply, then sale consideration will be taken as your full value of consideration. Yes or no, sir? This is 70 lakhs. This is 77 lakhs. 50C will not apply. Why? Difference is 7 lakh, which is not more than 10% of sale consideration. What is your sale consideration? 70. 10% of that? 7 lakh. Difference should be more than 7 lakh. But difference is equal to 7 lakh. 50C will not apply. 70 lakhs will be the full value of consideration. Yes or no? Now, sir, this is 70 lakhs. And this is 80 lakhs. 50C will apply, will not apply. Wait, sir, wait, sir. This is 70 lakhs. This is 77 lakhs, 80 lakhs. This is dosa. This is door. I wish you understand this. And 5 lakh rupees paid on dosa through ECS. Prescribed modes. So first of all, I will have to identify the correct stamp duty value. What is the correct stamp duty value? 80 lakhs or 77 lakhs? Why? Because on or before the date of sale agreement, 77 lakh or any part thereof, 5 lakhs is paid by way of prescribed modes. Yes or no? So out of 77 lakh, how much is paid? 5 lakhs. And it is paid on or before date of sale agreement. Yes or no? And by way of prescribed modes. Then 50C will apply? Not apply. Why? Because still the difference is equal to, so here also it will be 70 lakhs. Yes or no? Now the same case, same case. Duplicate. Done, sir? This will be 79 lakhs. Now you say. "50C will apply, will not apply." First of all, two stamp duty values are given, 79 and 80. Which stamp duty value? Date of sale agreement, yes or no? 80 lakhs will be ignored. Understanding? Why did you take 79 lakhs? Because as on the date of sale agreement or before that, out of the sale consideration, some amount is paid. Paid by way of what? Prescribed modes, yes or no? So, tell me, 79 lakhs will be considered. 79 will be compared with 70 lakhs. Difference is 9 lakhs. And by the way, 9 lakhs is more than 50C will apply now. 50C will apply. And 79 lakhs will now be treated as your full value of consideration. Done, sir? Now same case. So same case, sir. Duplicate. Done, sir? Duplicate. Now 5 lakh paid. Okay, on date of sale agreement through cash. Now bloody, if you will take 79 lakhs, no, you are gone. Now you are supposed to ignore 79 lakhs because this stamp duty value cannot be taken for 50C. Because on or before the date of sale agreement, the consideration is paid, but it is not paid through prescribed modes. So that 79 lakh cannot be taken. The stamp duty value as on the date of registration will be taken. Yes or no? Now that stamp duty value and 70 lakhs, is it the difference of 10 lakhs? Yes or no? And that difference is more than 7 lakh. Tell me, 50C will apply? Yes. And 80 lakhs will be treated as your full value of consideration. Will you remember this? Now pay attention. This only, same thing I am going to write. Copy. Can you see how many cases can be made? Huh? How many cases can be made here? Just imagine. Now tell me this. 5 lakh paid. Consideration is paid in prescribed modes only, but the consideration was not paid on or before the date of sale agreement. It was paid after the date of sale agreement. So in this case also 79 lakhs cannot be taken. You have to compare with 80 lakhs. So 80 lakhs and 70 lakhs, difference is 10 lakhs, and that is more than 7 lakhs. Yes or no? So 50C will apply and 80 lakhs will become your full value of consideration. Done, sir? One more case. Should I make one more case? Yes or no, sir? See, now the new case. ₹5 lakh out of 70 is paid. Is it paid on or before the date of sale agreement? No. After the date of sale agreement. Is it paid by way of prescribed mode? No. Other than prescribed mode. You must pay through prescribed mode and on or before the date of sale agreement. Both the conditions must satisfy. Only then you can take 79 lakhs. Yes or no? Otherwise you are supposed to take 80 only. Understanding? Compare with 80. 80, 70. Difference is 10 lakh, which is more than 10% of sale consideration. Yes or no? 50C will apply and 80 lakhs will be treated as your whole value of consideration. Will you remember all these things? Sure. Perfect. Now 3 stories I am going to tell you. How many stories? Stories of Mr. A. Okay, no? Mr. A. What is the sale consideration, Mr. A? Mr. A, what is the sale consideration? Mr. A says that my sale consideration is 60 lakhs. Okay, Mr. A, no problem. Mr. A, what is the stamp duty value as on the date of sale agreement or as on the date of registration, as the case may be? Any one stamp duty value will be taken, and you know now which stamp duty value has to be taken. Yes or no? So for example, stamp duty value was 70 lakhs. 70 lakhs. Mr. A, do you also agree that the stamp duty value of your property was 70 lakhs? Or you have any doubt about the stamp duty value? Even you agree that the stamp duty value of your property is? You accept that? Mr. A, you accept that? Have you challenged this value in the court? Meaning, according to you also, the stamp duty value of your property is 70 lakhs only. Meaning, Mr. A has accepted what? The stamp duty value. There is no doubt in the mind and heart of Mr. A that this should not be my stamp duty value. He has not challenged the stamp duty value in the court also. Even he agrees, even he accepts. No, no, stamp duty value of my property is 70 lakhs. Does he agree? Does he accept? So if he agrees, he accepts that the stamp duty value is how much? 70 lakhs. And that stamp duty value is higher than sale consideration, and the difference is more than 10% of the sale consideration. Here 50C will apply. Yes or no? And the stamp duty value which is accepted by the assessee will be treated as full value of consideration. Yes or no? Did you understand the first case story of Mr. A? Mr. A agrees and accepts that no, the stamp duty value, assessing officer, you are taking this 70 lakh rupees stamp duty value, no? Yeah, actually, stamp duty authorities, this is correct. Even I accept, even I agree. I don't have any problem with this when I have paid the stamp duty on the same amount. To pay the stamp duty, this is the stamp duty value. Agreed. Now second story, whenever something important starts, no, people go. Mr. B. Now it is the story of Mr. B. Let's ask Mr. B now. Mr. B, what was the sale consideration? Mr. B says, oh, my sale consideration is 80 lakhs. 80 lakhs. Okay. Mr. B, we come to know that the stamp duty value of your property as on the date of sale agreement or as on the date of registration, as the case may be. Yes or no? So we came to know that the stamp duty value of your property was 95 lakhs. 95 lakhs. Do you accept the stamp duty value? Mr. B says that no, I don't accept, and I have challenged stamp duty value in court. Challenge this stamp duty value in the court. Oh, meaning you have a problem with the stamp duty value itself. Meaning you are not paying stamp duty on the stamp duty value. No. That registrar is a mad fellow. Bloody, he doesn't know that how to determine the stamp duty value. Stamp duty rules, stamp duty law tells the determination of stamp duty value in a different manner, and he has become very biased. In a very biased way, he has determined the stamp duty value of 95 lakhs. Bloody, I am not paying him stamp duty also on that value. Assessing officer will feel a little bit shy that if he does not pay the bloody stamp duty on this value, will he pay income tax on this value? So for the purpose of section 50C, this value cannot be taken only. Now because it is a subject matter of appeal now. Now let the court decide that what should be the stamp duty value. That stamp duty value, the assessee will also agree and the registrar will also agree. And we will take that stamp duty value. Yes or no? But the stamp duty value on which the assessee is not ready to pay the stamp duty also, will he pay income tax on that? So till the time the stamp duty value is not decided by the court, we cannot take this stamp duty value. Understanding? Because this is the subject matter of dispute. And till the time the dispute is not resolved, the court is not giving any stamp duty value, we cannot take this stamp duty value for the purpose of 50C. Because this stamp duty value is challenged. So if the stamp duty value is challenged by assessee in the court, okay, no? So this stamp duty value cannot be, what did I say? Cannot be considered for section 50C. Meaning comparison of this stamp duty value with sale consideration cannot happen. Why? Because this amount was a subject matter of court appeal. Now, whatever the court will decide, that will be accepted by the assessee and as well as the registrar. And that value we can take for 50C also. But this amount is accepted by the registrar, but the assessee does not accept it. Assessee himself has challenged this amount. On this value, the assessee is not paying the stamp duty to the registrar. Will he come and pay income tax on this value? No. So for the purpose of 50C, this value cannot be taken. Understanding? So now what will happen? This stamp duty value, which was challenged, the court will decide. Okay? So court will decide. And the court can decide what stamp duty value? Come on, tell me. Court will decide. So the stamp duty value, court will decide. Court decided stamp duty value. What stamp duty value the court will decide? Can the court say that the stamp duty value is 82 lakhs? Yes or no? Then 82 lakhs will be taken. But 95 cannot be taken. 95 is a subject matter of appeal. That is disputed stamp duty value. Yes or no? So, which stamp duty value? The stamp duty value finally decided by the court. So now check this stamp duty value and sale consideration. There is a difference? Yes. But the difference is not more than. Then in this case, what will be the full value of consideration? 50C will not apply and full value of consideration will be 80 lakhs. Yes or no? This is the first case. What if the court decides that the stamp duty value is 89 lakhs? Possible or not? Then 50C will come. 50C will come. Why? Because the decided stamp duty value and the sale consideration difference is 9 lakhs. And 9 lakhs is more than 8 lakhs. Yes or no? 10% of 80 lakhs. So here 50C will apply and the stamp duty value decided by the court will now be taken as your full value of consideration. If the assessee wins the case, then these two possibilities. That the court has decided a stamp duty value lower than 95 lakhs. Yes or no? But what if assessee loses the case? Then the court will say that the stamp duty value which is decided by the registrar is correct. Even the court is saying that how much should be the stamp duty value? So court has given the decision in the favor of registrar. So court will say, no, whatever registrar is saying, the stamp duty value of the registrar is okay. So now, the 95 lakhs, which is equal to registrar's value, yes or no, is the court's final stamp duty value. Done. So now compare this. Is it more than 80 lakhs? Yes or no? Difference is 15 lakhs. Yes or no? 15 lakhs is more than 8 lakhs. 50C will apply or will not apply? Will apply. So what will be the full value of consideration? Tell me. 95 lakhs. 95 lakhs. Did you understand what happened in your life? Hello? What happened in your life? In the case of Mr. B, is Mr. B accepting the stamp duty value decided by the registrar? No. So if he does not accept that value, he has challenged that stamp duty value in the court. So the stamp duty value which is challenged in the court cannot be taken for section 50C. What will be taken for 50C? The stamp duty value finally decided by the court. So stamp duty value decided by the court. If that value is more than sale consideration and the difference is more than 10%, then the stamp duty value decided by the court will be taken as full value of consideration. But if the court's stamp duty value and is more than, is more than what? Sale consideration. But the difference is not more than 10%. Then sale consideration will be taken as full value of consideration. Can the court decide a stamp duty value lower than your consideration also? Yes. What if the court's judgment coming that the stamp duty value is only 75 lakhs? So is the stamp duty value decided by the court is more than sale consideration? No. So no question of applying 50C applies here. Yes or no? Then full value of consideration will be 80 lakhs. 80 lakhs, your sale consideration. Whenever 50C does not apply, that time, whenever 50C does not apply, that time your sale consideration only will become your full value of consideration. No? Ayyo. Understanding? Second story of Mr. B, did you understand? First story of Mr. A, did you understand? Now the third and very important story, Mr. C. Mr. C, Mr. C. What was your sale consideration? Mr. C is saying sale consideration is 60 lakhs. Oh, 60 lakhs. What is the stamp duty value? 70 lakhs. Mr. C says, see, listen, assessing officer, AO, I don't accept this stamp duty value. No. And I swear to God that I have not challenged the stamp duty value in court. So let us take this stamp duty value. No, please don't take. See, I don't accept it. And I swear that I have not challenged this in the court. But I request you, please don't take this stamp duty value as my full value of consideration, even if it is more than sale consideration, even if the difference is more than 10%. Please don't take this stamp duty value. It is going to put me in trouble. The assessor is saying that it is going to put me in trouble if you are going to take this stamp duty value. So you is asking, what trouble, macha? Huh? What trouble? See, assessing officer. Now see what Mr. C is saying. AO, see, I have not challenged this stamp duty value in the court, and I am not accepting this stamp duty value also. Why, you know? I am making you an application. So assessor will make an application to whom? To his AO, and in this application he is telling the assessing officer that AO, the stamp duty value amounting to 70 lakhs which you want to consider as my full value of consideration, if you will take this, it will be unnecessary harassment or problem for me, because the stamp duty value which you are taking is already higher than the fair market value of my property. My property's value itself is lower, buddy. Bro. My property's market value itself is lower than the stamp duty value. Then how am I going to get a sale consideration more than stamp duty value? Sir, AO, sir, please listen. Apply some logic, sir. Sir, my market value of the property, is very less than the stamp duty value. The stamp duty value which you are taking, for me, under section 50C, as compared to that stamp duty value, the market value of my property itself is lower, sir. And the buyer is not going to give me the sale consideration based on my stamp duty value. Buyer is going to give me the consideration based on the market value. And bloody that market value itself is lower than the stamp duty value. How am I going to get the sale consideration more than stamp duty value? Apply some logic. And if you are going to take that stamp duty value, it will be unnecessarily a harassment for me. Sir, request you not to take this stamp duty value, sir. Who is saying this? AO no? Or assessee? To whom? What he is saying? Don't take this stamp duty value as my full value of consideration. Even if the consideration is less and the stamp duty value is more. Even if the difference is more than 10%. Please don't take this stamp duty value because I don't accept it. Oh, so you have challenged. No, mother swear I have not challenged in the court also. But why are you telling me not to take it? I am telling you because the fair market value of my property is less as compared to this stamp duty value. And since the fair market value was less, no, hence my sale consideration is also less. Because the buyer is not going to give me a consideration based on stamp duty value. Buyer is also going to give me the consideration based on market value, and which was lower than the stamp duty value. That is the reason why sale consideration is also lower. And unnecessarily, if you will take the stamp duty value, it will be a problem for me. Please don't take it. Logical thing. Assessee's argument is logical. Will the AO accept his argument? Will he accept? Then every assessee will bloody go and tell this only. Hello? So you are giving a logical argument, okay, no? Taking this stamp duty value will be unnecessary problem for you. So we are not going to take it. But we are not going to take it based on some evidence. So how can you be very sure? See, I am very sure because I am telling you that it is less than, stamp duty value is higher than fair market value. Fair market value is less than stamp duty value. Yes or no? I am saying confidently. If you don't believe me, get the valuation of the property done. You will come to know that whether I am lying to you or I am telling you the truth. So what now AO will do? AO, when the application will be made to him saying that the stamp duty value which is taken as my full value of consideration is higher than the fair market value, meaning the fair market value is lower as compared to the stamp duty value. Yes or no? So AO on receipt of this application will refer, AO will what? Refer the valuation. Refer the valuation of such property to whom? To valuation officer, VO. So income tax department has valuation officers also. What is their role and what is their expertise? These valuation officers will conduct valuations in different cases, different scenarios. Yes or no? So whenever the assessing officer or the income tax department would require the valuation of something to be done, that valuation is referred to these valuation officers. They are experts in valuing the things, valuing the do the valuation for different purposes. So now the AO will refer the valuations of such property to the valuation officer of the department, because we cannot tell you to get this valuation done. Because if you are going to get this valuation done, definitely you are going to manipulate the things. Yes or no? So we believe you. But that does not mean that we will accept the market value which you are, getting it done from outside. No. Don't worry. This application, logical thing, we'll get the property valued on our own. We have our own valuation officers. So the case will be referred to valuation officer of the department. This is known as DVO. DVO means Department's Valuation Officer. Yes or no? Now what this DVO will do? He will do the valuation of the property. Now whatever value the valuation officer will determine, can I say this is VO's value? Yes or no? Can I say VO will determine the value? The value which will be determined by the VO will be VO's value. And VO's value was actually lower than stamp duty value. Ayyo, Are you getting a consideration lower than stamp duty value? Yes. And you are saying that the consideration is lower because the fair market value was lower. Yes or no? See, our valuation officer's value is actually lower. That means you are telling us the truth. Even our valuation officer's value is less. So in this case, no, we will accept your request and full value of consideration. We were taking what? Stamp duty value. We will not take the stamp duty value. Don't worry. So now which value will be taken? We will take VO's value because that is still higher than your consideration. What was your consideration? 70 lakhs. Sorry, 60 lakhs. Yes or no? What was the stamp duty value? What was the stamp duty value? 70 lakhs. So you are saying that the market value is less than 70 lakhs, no? Market value is less than 70 lakhs. Hence you are receiving what? Less than 70 lakhs. Yes or no? So we also got the property valued, and our valuation officer's value was 65 lakhs. Actually you are correct. The value of your property is less as compared to the stamp duty value because our valuation officer's value 65 lakhs is less than 70 lakhs. Yes or no? Meaning you are correct. We will not take 70 lakhs. Sorry. Then take my 60. No. Your 60 still we cannot take because our valuation officer's value 65 lakhs is still higher than your sale consideration. So we will take what? Tell me fast. VO's value. We will take if this VO's value is greater than sale consideration, then we are going to take the VO's value. Yes or no? But what if the VO determines the value 55 lakhs only? Yeah, you are correct. We will not take 70. Stamp duty value we will not take because actually our VO's value is also less, only 55 lakhs. Then you will say, okay, then take VO's value. Oh, no, you are actually earning more than our VO. How much? 60. That 60 will be full value of consideration. Sale consideration will be taken as your full value of consideration. If VO's value is less than or equal to your sale consideration, then your sale consideration only we are going to take as your full value of consideration. Understanding or not? But second case is possible or not? Second case is possible or not? VO determined the value, but the VO's value was actually equal to or more than stamp duty value. Actually equal to or more than. How much is the stamp duty value? And our VO determined that the value is 70 lakhs or 75 lakhs. Possible or not possible? That means you are trying to fool us. See, our valuation officer got the value and that value is equal to stamp duty value or more than that. That means you are trying to fool us. Whatever we were doing earlier was correct. What we were doing? We were taking stamp duty value as your full value of consideration. That is correct. So in this case, your full value of consideration will be stamp duty value. Even if the VO's value is higher than the stamp duty value, still that VO's value cannot come. Only the stamp duty value will come. Because 50C does not give the right to take any value higher than stamp duty value. Even if the VO's value was 75 lakhs, no. That is a conclusive evidence that you are trying to fool us by giving us such request. See, our valuation officer's value is already 75 lakhs. And we are not that bad that we are going to take the VO's value. We will still take the stamp duty value because section 50C allows us to take the stamp duty value only, not a value more than that. Understanding? So, full value of consideration will be stamp duty value even if VO's value is more than stamp duty value, comma, VO's value cannot be cannot be taken because 50C allows only stamp duty value to be taken as full value of consideration. No amount more than stamp duty value. Because if you want to charge that higher amount, there has to be some law, provision in the law which allows you to take that higher value. Provision is 50C, which tells you to take a maximum amount of stamp duty value, and if any amount other than that, higher amount is there, that higher amount cannot be taken as per 50C. So if VO's value was higher also, then also the assessing officer cannot take the VO's value, he has to take the stamp duty value only, which he was earlier taking. Yes or no? So he will ignore your request now and he will take the stamp duty value. If VO's value was higher or equal to the stamp duty value, then VO's value will be ignored and whatever the stamp duty value was there, that will be taken as full value of consideration. Story number 3, no, of Mr. C is most IMP story. This is very emotional story, you know, and emotional stories are very, very popular and especially liked by the ICI a lot. ICI will make you emotional in the exam, no? While writing, you will not remember the things, you will get emotional. So ICI is an emotional body. So emotional stories they ask a lot. They will not ask A story. No. Very easy. B story is somewhat easy. C story is very emotional. So they will put this thing in the exam. Whenever there is a question on capital gains in the exam, majority of the questions are framed on shares and immovable properties. So either the capital gain on shares they will ask in the exam, or they will ask in the exam capital gain on immovable property. Majority of the time only these two assets, capital gains, questions are there in the exam. Majority of the times. And whenever there is a question on capital gains for immovable property, without fail, they will ask you 50C in that question. Without fail. And you are very, very, very lucky if 50C is not there in that question. So always in the capital gain question, two types of assets are asked. One, shares. Second, immovable property. But whenever a question on immovable property is asked in the exam, no, confirm, I am telling you, confirm, in 99% of those questions, they test you for section 50C. And if 50C, if that question they want to make a little bit tricky, what they will do? They will introduce this part in the question as adjustment. Or they will introduce this part in the question. Confusion about stamp duty value. Which stamp duty value to be taken and which stamp duty value to be ignored. This confusion they will create. And if you get through with this confusion, then they will put you in more trouble. Emotional story. We'll see how these things are there in the questions. But this is the end of section 50. Yes or no? Now I'm asking you one thing. One very simple thing I'm asking you. Which type of asset we were discussing? Immovable property. Asset is immovable property, right? Everyone please pay attention. Important discussion. Last discussion and then this section will be over. Immovable property is there. What if this immovable property, the sale consideration is less than stamp duty value? Okay. And the difference between both of them is more than 10% of what? Sale consideration. That time which section gets applied? 50C will apply. Yes or no? And that time the full value of consideration which you charge under the head capital gains is what? Sale consideration? No, it is the amount of stamp duty value. Yes or no? Now let's take one example. In that example, if the sale consideration was 60 lakhs and the stamp duty value was 70 lakhs. Okay. Difference is 10 lakh. That difference is more than 10% of 60 lakhs, meaning more than 6 lakh. Yes or no? 50C will apply. And as per 50C, what will be your income? What will be your income under the head capital gain? It will not be 60 lakh, it will be 70 lakhs. So instead of 60 lakhs, you will consider your income 70 lakhs under the head capital gain, because the immovable property is your capital asset. Capital. What if the immobile property is held by you as a stock in trade? Can you have an immobile property as a stock in trade? So if an immobile property you are transferring as your capital asset, assessee, you are transferring your immobile property as a capital asset, then only 50C will be applied. Then only 60 lakh will not be considered as your income under capital gain. 70 lakh will be considered as your income under capital gain. Understanding or not? 50C applies only in that case. What if you are a builder, property dealer? For you, now the immobile property is not a capital asset. For you, now it is your. Can you sell the stock in trade? Your selling price was 60 lakhs. Stamp duty value of your stock in trade, immobile property, was 70 lakhs. Difference is more than 10% of the sale consideration. Will you apply 50C? Because 50C applies only if the immobile property is transferred as capital asset. Now since 50C will not be applicable, 50C will not be, what amount will be treated as income under the head PGBP? Sale consideration or stamp duty value? Sale consideration. Because if 50C is not applied, then stamp duty value cannot be taken. Only the sale consideration will be treated as your income. Yes or no? So since 50C is not applicable, because the property is sold as what? Stock in trade. Now in this case, 70 lakhs will not apply, and 70 lakhs will not be treated as your income, and your income will be 60 lakhs under the head PGBP. Don't you think that this is wrong? Hello? If I do the comparison side by side, okay, no? This is immobile property, which is your capital asset, giving you which income? Capital gain income. Yes or no? And this is again an immobile property, which is your stock in trade, which is giving you your which income? PGBP income. If under capital gain 50C can be applied, and full value of consideration, meaning the income under the head capital gain, instead of sale consideration, stamp duty value is taken, then the same thing should happen for PGBP also, no? But in PGBP 50C cannot be applied. If this happens under the head capital gains, then why not the same thing should happen for PGBP? If under the head capital gain, if one poor assessee selling a property once in his lifetime for a less consideration and showing a consideration less than stamp duty value, he is not spared and he is made liable to pay tax on a higher amount and not the sale consideration, then why not these people who are selling the properties again and again at a consideration lower than stamp duty value, why they pay tax on sale consideration again and again? Even they should pay tax on a minimum amount of stamp duty value. Yes or no? But to them 50C cannot be applied. So if 50C cannot be applied, so 50C can be copied, no? Hello? And after copy, it can be pasted here, no? So 50C copy, 50C paste under the head PGBP. Only they have changed the section number. Now whatever is there under 50C, you will see the exact same thing under 43CA, under PGBP head, which I left at that time. I told you that I am going to cover it with capital gains under section 50C. Understanding? So under 43CA, what will be your full value of consideration, meaning your income under the head PGBP. It will not be the sale consideration of your immobile property which you are selling as a what? Stock in trade. No, there also we will charge stamp duty value. So now tell me, immobile property held as capital asset, immobile property held as transferred for a sale consideration which is less than stamp duty value. Difference is more than 10% of sale consideration. Which section will apply? 50C. As per 50C, sale consideration will be ignored. Stamp duty value will be deemed to be your full value of consideration. Taxable income under the head capital gains. Done. Now coming to the next part. If the immobile property, you are holding an immobile property as a stock in trade. Now are you holding the immobile property as capital asset? No. You are holding the immobile property as stock in trade. So you are in the business of buying and selling the immobile properties. Yes or no? Now this immobile property which you are holding as a stock in trade, you are selling as a stock in trade of your business. Yes or no? So your immobile property you are selling as a stock in trade, and your sale consideration which you are going to show as your taxable income under the head PGBP, if the sale consideration is less as compared to the stamp duty value, and the difference between the stamp duty value and the sale consideration is more than 10% of the sale consideration, then here 50C will not apply, another section will apply, 43CA will apply, and as per 43CA, the sale consideration which you are showing as taxable PGBP income will be ignored and the stamp duty value will be considered as your PGBP income to calculate your business profits. Will you remember? Every damn single thing which we have discussed about stamp duty value under section 50C, each and everything copy and paste. Stamp duty value as on the date of registration, as on the date of sale agreement. Which stamp duty value you will take? Date of registration. Under the head PGBP also. Yes or no? But usually we take date of registration. But one exception. The stamp duty value as on the date of sale agreement can be taken for 43CA if the consideration or any part thereof is received on or before the date of sale agreement by way of prescribed modes. Then the stamp duty value as on the date of sale agreement can be taken for 43CA also. Getting my point? 3 stories I told you. Stamp duty value agreed, accepted. That stamp duty value will be full value of consideration. Stamp duty value challenged, then stamp duty value determined by the court will be taken. And what if the assessee does not accept and assessee does not challenge the stamp duty value, but he makes an application to the assessing officer that fair market value of the property is less as compared to stamp duty value? Then AO will refer the case to VO and VO will determine the value. And what if the VO's value is actually less than stamp duty value? Then stamp duty value cannot be taken. VO's value will be taken as your income. If that VO's value is still higher than your sale consideration, then don't see the difference. Yes or no? Entire VO's value will be taken as your full value of consideration. Understanding? But if VO's value is lower than stamp duty value, but it is also lower than your sale consideration, then your sale consideration will be taken as your full value of consideration. But what if the VO's value was higher than or equal to stamp duty value? That means you are trying to fool us. We are not going to take your value as full value of consideration. We are going to take the stamp duty value only as a full value of consideration under the head PGBP also. Getting my point? Hello sir. everything which we have discussed in 50C as it is word to word same for 43CA. Not a single change. Understood? Sure, sir? That was the reason why I did not do 43CA that time. If I would have done it that time, what would have happened? The effort which I have put right now for 50C, same efforts I would have to put for 43CA. And by now you would have forgotten that. So I had to teach you 50C again. So I have taught you 50C once, 43C automatically covered. So that will save my time also. And you will also remember, this thing is happening in the case of immobile property held as stock in trade. So sir said that here 50C will not apply, here 43CA will apply. We are going to do the same things. Understanding or not? Sure? 50C is done. Now we'll take a break, and after the break we'll continue from here. Majority of the part we have completed. Okay, now after this we are going to solve the questions. Few things we are going to do, and then we are going to solve the questions. Okay? See you after 1 hour.